Everyone, I call this meeting to order, our March board meeting. Let's please stand for the pledge and a brief moment of silence. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right, everyone, thank you. First item on our task is to approve this month's agenda. Need a motion for that.
I make a motion to approve the agenda.
The first,
Second.
we have a second. All in favor, say aye.
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 Yes. All right, next on the agenda is the audit report by Earl Redmond. Welcome. Thanks for coming out and sharing with us what we need to know.
No problem. Does everybody have a copy of the audited financial statements in front of them? I think I have every seat. Well, if you would, go ahead and open that up to page 4 of the balance sheet. I'll start there. As I've done in the past, I try to kind of highlight some of the major changes from last year to this year. Just because for the most part, a cooperative kind of stays similar. So I'll pull that out. But as you do turn to page 4 of the balance sheet, you're turning past my audit opinion. And it's important every year it's repetitive, but it's also important for you charged to governance to understand what the audit opinion states. And in some cases, more importantly, what it's not saying. You did receive an unqualified audit opinion, which some call that a clean audit opinion, which sounds like the goal, the thing you're looking for when you get an audit. But as I talked last year, it's actually very difficult to not get an unqualified opinion. It doesn't say that there were no errors present. It doesn't say you don't have deficiencies in the controls that were identified. It simply states that those were corrected in this report if they existed, and therefore you received an unqualified opinion. So at the end, if there were any adjusting journal entries that were necessary, and even more importantly, the nature behind why those may have been necessary, that's more the results of the audit. And that's what you want to focus on because basically every entity will receive an unqualified opinion unless we found an error during the course of the audit and you just refused to correct it. So it was an unqualified opinion, but I will go over at the end if there were any changes needed to get that unqualified or free of material misstatement report. If we start on the balance sheet, and I'll start right in the middle of the page, you can see your total assets for the year went from 63.9 million, almost 64 million last year, to just over or just shy of 66.7 million in the current year. So for the year, you increased your assets holding by about $2.7 million. I talked about this a little bit last year, but when I look at the financial statements, because a cooperative is unique, I look at it from the cooperative basis. You know, I work with a lot of cooperatives, so certain financial statements tell us things differently than other companies. Well, for a cooperative, you look at the balance sheet and you think, okay, we're an entity designed to only collect from our members what it takes to serve our members, which I'll get to on the cash flow. But the same thing kind of applies to the balance sheet. If our members own our assets or they owe on them equity or debt, what assets do they own? So in the current year, we had a $2.7 million increase in assets. If you look at the very top line, half of that, 1.3 million, was an increase in the plant that you put in the ground. Another increase then, which was unique this year, or not unique, but new, is the third line down, your deferred charges. You can see you did not have any last year. That increased to $600,000 in the current year. That is essentially CWIP, but that's your fiber project investment so far. So when you look at the assets you're putting in the ground, you've always done the electric plant. Now you also have started this fiber investment. Of the $2.7 million increase, $2 million of it was an investment in the very plant needed to provide the services you guys are providing. The only other increase then was in the second line, current assets, and that's your accounts receivable. And that was pretty consistent across the industry because weather related. December of 2024 was much colder than December of 2023. 2023 was actually one of the most mild years in the last 15 years for this region. So everybody was kind of down in 2023. You saw allocations down. 2024 wasn't really extreme. It just came back to normal. So when you see the accounts receivable up $600,000, that's mainly related to the fact that your usage was up in December, which is what accounts receivable recognizes. It's the outstanding amounts owed. For the most part, that's going to be around a 45-day window between billing and when you get to collect. But what I pointed out at the start, when you think about what your members own for a cooperative, and you look at their asset base, they own or owe on $66.7 million worth of assets at the end of the year. But if you dig into that first line, utility, plant, and service, the second line, investments, of your $18 million worth of investments that you hold, $16.7 million of that is your investment in Hoosier, which essentially is investing in their plant so that they can then transmit the power to you. So then you can invest in your distribution plant to distribute the power. Then if you look at third line down in current assets, you have about $700,000 in materials and supplies, which are, from a timing standpoint, things you hold that will eventually roll into plant. Those three assets, those investments in plant, those things that your members own or owe on, make up 90% of all the assets your company has, which, like I said, I look at it from I work with over 40 of them. I look at it from a cooperative standpoint. You want your asset makeup when people pay their rates, and they are either paying debt that you had to borrow to put in assets or they're owning the assets. You primarily want it to be the assets needed to get them the service they want. 90% of your assets are literally the utility plant assets needed to serve them. So that reflection or picture is exactly what you would expect from a cooperative. And I think that speaks well to, on a balance sheet standpoint, knowing that you're only investing or only asking your members to invest in the things that are needed to serve them. If we look at the bottom, then obviously if your assets go up, your members do either own more of them or owe more on them. The very first line in that bottom section, your long-term debt, and I'm going to go down to the current liabilities real quick, because you can see you did have some line of credit, some temporary borrowings this year that were zero last year. They increased to $500,000. But including that, your total debt actually went down about $500,000 this year. So your assets went up $2.7 million. The debt owed on those actually decreased in total by $500,000. That was then offset by the very middle section, equity. Last year, you had $39.7 million in equity. This year, that increased to $42.7 million. So about a $3 million increase in equity held. All the assets increased this year were basically increased on a membership ownership basis, none of it was related to debt. And that $3 million increase, that's $3.9 million worth of margins, which if you flip one page, we'll go over what created those margins, being offset by the fact that you retired back around $1 billion to the members. Any questions on the balance sheet? Well, if you look at the next page, then the statements of revenues, most people call that the income statement, but my profession likes to make things complicated. So if you're a not-for-profit, it's called statement of revenues instead of income statement. But looking at that, as I talked about before, to me, this is the least valuable statement that you can look at as an electric cooperative. When we look at the balance sheet, it's very important to say whatever our members own or what they owe, what's it related to? It should be related to the assets needed to get them the service we're designed to provide them. And as you could tell, 90% of it were the very hard assets needed to give them that service. Well, then what you collect from them in order to serve them is more told by the statement of cash flows, because even though you fall under the not-for-profit code, you're not really designed to not create a profit. Profit by definition is revenues in excess of expenses in order to own assets, equity. Well, your assets are long-term assets. The utility plant needed to serve them. So you have to create a profit, really, unless you want it to be 100% dead. You would have to create a profit to own the assets needed to serve. So when I look at the income statement, we can kind of highlight some things and some changes from last year, but when we get to the statement of cash flows, I think it'll tell you a much better on what does that actually mean. We collected, if you look at the bottom of the page, $3.9 million in net margins, or profit, if you will. When we get to the cash flow, we'll kind of see what does that actually mean from what did we collect from our members and where did it go. But if you look in this, the changes from last year to this year, that increase from 3.5 million to 3.9 million, you'll see a lot of it starts on the very first line. You had $39.8 million in revenue last year. This year, that was up to almost 40.8 million. Most of that being the fact that you sold more kilowatt hours in 2024 as the weather regulated back to what it was, or what it normally is, as opposed to 2023. So your usage was up, and that drove more revenue collections. If we look through some of your operating expenses, you can see that your operations and your maintenance expense, operations went from $1.1 million to $1.3 million. Maintenance went from $2 million to almost 2.3. But most of that increase, especially in operations, really wasn't a cash increase. It was because the stuff that your people are doing out there working was more maintenance related, which you expense, as opposed to capital related, which you capitalize and depreciate. So last year you had more of their time allocated to items that you would capitalize and depreciate over time. This year, more of their time was allocated to expense, maintenance, repairs of items. And the reason why that's important is because you don't pay them more related to expense or capital items. So from a cash basis, the number's the same. It's just related to whether or not it was capitalized or expense. This year, a little bit more was expense. Now, on the maintenance side, that increase was driven primarily by the fact that you did more tree trimming and right-of-way clearing this year. And that is something that every cooperative deals with. It's cyclical. There's going to be years where you have more. There's going to be years where you have less. In the last several years for cooperatives, they've had to deal with the fact that availability and rates are both, availability is lower and rates are higher. So you kind of see the wave go up and down a little bit more than it used to, but it really doesn't change the fact that when you look over a 3-year or 4-year period, you're kind of in the same place. You just might spend more 1 year than you do the next, but you're always, tree trimming is kind of like hair except mine. And that is, you have to trim it, but it grows back. So if you could figure out how to do this to your tree, then you could save a lot of money. Then it just falls down and you'll have a lot of weeds here. So member service expense, that's the biggest change that actually went down. You can see last year it was $650,000. This year that decreased to $300,000. And that was related to, we brought this up last year, it was a past journal entry that you implemented in the current year. If you remember, and I actually, like I said, I've dealt with a lot of cooperatives today alone, and several of them have this. It's a very good thing for the industry, but the fact is that you guys don't have as many bad debt expense write-offs as you used to. And the reason for that is because capital credit retirements have been more aggressively pursued in the last decade or so by most cooperatives. Well, when you pursue those, if somebody owes you $100 from 10 years ago because they had a bad debt and left, and then now all of a sudden they have $100 in Patrick's capital, you obviously aren't going to pay them the $100. You just offset it. So what you've seen is the increase of capital credit retirements is really offsetting the bad debt expense and lowering what write-offs are being absorbed by the cooperative. So in the last year, we recognized that the provision, the estimate of what could go bad was higher than what we thought was needed. And that was passed through this year. So $300,000 of decrease, of increased margin this year is moving that provision for bad debt down because you guys are not having to write off as many bad debts as you used to. So really, when you look at your operating margins of 3.5 million this year compared to 3.2 million last year, most of that change was recognizing that lower write-off that you have. And that should continue going forward. Any questions on that? All right, well, if you flip a couple pages, then I'll get to what is the most important page or part of the financial statements, really for any business, but especially for cooperative. On page 7, the statement of cash flows. And that's directly related to what I talked about on why I don't think the statement of revenues necessarily offers what you want to know as much as this does. And that's because you're designed to only collect the amount of cash from your members it actually takes to serve your members. Which means when you look at the statement of cash flows, that paints a much better picture than statement of revenues, which has differences between what you actually have to put in the ground. If you look at the first line in investment, cash flow from investing, you put $3 million worth of plant in the ground this year, which means you have to collect $3 million from your members to put the plant in the ground to serve them. But depreciation expense was only $1.8 million. So expense related to plant was 1.8, but you have to collect 3 million, which means that difference creates 1.2 million of margins by itself. You also, if you look at cash flow from financing, you paid back on the net, taking out the long-term borrowing, the first 2 lines there, paid back $400,000 of debt. So you have to collect from your members the $400,000 to pay that debt off. You see the 876 less the 500 that you borrowed. That's a revenue. There's no expense to offset it. So another $400,000 of margin created because you paid your debt off. From a cash standpoint, you only collected what you needed to pay the debt. You have no cash, but the margin is the equity change. They no longer owe on those assets. They now own those assets through equity. The last one then is the very bottom line in cash flow from financing. You paid about $900,000 back to the member. So when we look at what you had left over from operating, that top section, you had $4 million in cash that you collected in excess of your expenses. You then paid $4.3 million to put plant in the ground to serve the member, service the debt of the member, or return it back to the member. So the very top line, you collected $40 million worth of cash this year from your members with one goal in mind, and that is to only collect what we need to serve you. And in the current year, you missed that by about $300,000 to the negative. You actually collected $300,000 on cash basis, less than what you needed. So you hit that at about 99.99% accuracy, but it actually worked against you. This is why I say the statement of revenues doesn't tell a story, because you can look at that and say, well, we made $3 million in margins or profit. But the cash flow tells you what you collect from your member, where it went. You did make $3 million in profit to invest in plant to serve the member or to pay off the debt of the member. Both those things, plant increased in the current year that was needed. No offense to your system, this is every cooperative, so don't take this the wrong way, but pretty sure you're not gold plating your system out there just to do it. You're investing in the plant needed to serve the member to make sure that when a storm hits or when they want to turn their lights on, they come on. So that work plan in place ensures that you have reliable energy, which is what, as a board, you're charged with, at the most cost efficient way. And the cash flow shows that you only collected from the member what you needed to serve them. So the margins this year are an increase in their investment in the assets owned to serve them, which make up 90% of the assets. So I think both the balance sheet and the cash flow kind of tell the story that this cooperative for this year operated exactly how it should operate. If your members owe money on assets or own assets, or the assets needed to get them the service, and what you collected directly went to the investment in the service, cover expenses, or you gave it back to them, $900,000. Any questions on that? Well, the last thing I have then is at the very back page, there's a loose leaf letter. This is what I alluded to at the beginning with the audit report, where an unqualified opinion sounds like your goal, but in reality, it's something that's difficult to not receive. I've given many examples before, but I've had a cooperative where I went in and their internal financials produced that they had a $2 million net margin. But in reality, after all of their adjustments, they had a $5 million net loss. They received an unqualified opinion because the audited financial statements showed the $5 million loss. But at the end, I then had to go through with their board. These are the errors, and these are the reason why the errors existed. And that told the story that, yes, these financial statements which show the loss are free of material misstatement. But throughout the year, your policies and procedures and the execution, your people that execute those policies and procedures were failing either in design or execution, which means the decisions that you had to make throughout the year were based on incorrect information. If you look in that letter, and I'll cover the letter a little bit in a minute, if you flip to the very last page, I am required to report to you any corrections that we proposed and you booked to get these financial statements free of material misstatement. In the current year, you had no adjusting journal entries needed to get the financial statements free of material misstatement. This last page is a past journal entry, so something that we identified as technically we would book, but we don't believe it's material. And that is purely related to an estimate of what will be owed on property taxes. So obviously when your property tax bill comes in, you're going to pay your property tax bill. There's no issue there. But looking at historically, like what you paid last year, we think it was a little bit, in this case, understated, but it wasn't material. So we don't propose that you book it. It's not going to, it really is just a timing thing on when you accrue versus when you pay. So it wasn't related to an error. It's just related to an estimate. And in your industry, you have a very unique thing. I won't get into it because I'm pretty sure, I'm taped so I won't say it, but I'm pretty sure a lot of parties in there don't even understand it. But on your property taxes, you have what's called an obsolescence percentage. And that obsolescence percentage changes annually. It's trying to estimate how much of your plant in the ground out there is actually just obsolete. So that percentage is very difficult for any cooperative to actually estimate. It's a good thing for the cooperatives. It's a needed thing. But that fluctuation can cause it to all of a sudden your estimates off. And this year, most of the cooperatives we deal with in Indiana, their property tax went up a little bit because the obsolescence percentages were a bit lower. So it's not related to an error. It was a very clean year for your group. I think they do a very good job of not only the policies and procedures that you have in place, but actually following those and checking off to make sure that they produce reliable information through the year for you. It's a very good report.
So you mentioned this adjustment here, and you mentioned the word materiality. So what is the threshold of materiality for you?
So materiality is based on, it's in your rep letter. I don't remember off the top of my head exactly what the number is for you, but materiality, it goes through, was that? So it's 407,000, but that would be in total. Then you go through a lot of different areas. So I basically, we have individually significant items, which would be, for us, 25% of that number. So $100,000 would be individually significant. 400,000 would be like the collection of all errors. But for past adjustments, we actually show you any of those that are trivial, which is 1/3 of individually significant. So if we decided not to book it, which I think some of our people would know, we still propose, and most of the time they book even trivial numbers. I did one this morning that part of the entry was 8 cents. It was not an 8 cent entry, but part of it was 8 cents because I had to correct it. But that threshold is around 30 grand for you. That materiality is basically saying, obviously, if we find something that's off, we report it to your staff, but to correct it, it would be, if we don't correct it, would a user of the financial statement actually make a different decision? So if you're deciding, are we financially stable? should we raise rates? Like questions you have. If accounts receivable was off, say $1,500, that's not going to change whether or not you need to raise rates. That's basically
That kind of is where that term or that number comes from.
It's trying to establish, it's letting you know that this isn't saying that all the way down to a penny, it's correct.
Yeah.
But it is all the way down to a level that you can rely upon based on accounting standards, that you wouldn't change your opinion or change a decision. And in incorporating that, it's not just you, it's all users. So you have lenders, you also have members, anybody that uses your financials. It's trying to make sure we get to a level that will be reliable to not change the opinion that you would make. That is all I have, unless you guys have any questions for me.
Brian, are you there? Brian Scheidler?
Yeah, Steve.
Do you have any questions? I think what we'll do, Brian, and if you do now, that's fine. But we've done it in the past a couple of years where we've gone into executive session just for a few minutes.
Sure. Yeah.
And I think we'll be doing that. Also the audit report. We have a first.
I'll second.
We have a first and a second. All in favor, say aye.
Aye.
Opposed, the same. Brian, I need to hear from you.
I approve.
Okay. Unanimous. Yes. All right, so going into the next item, Brett, the safety minute and cool moment.
Safety minute. I usually go over this every year. There's actually going to be a article in it in next month's magazine, but it talks about being mindful when driving through work zones. So just some data here. There's 269 people killed in work zone accidents over the past decade. In 2023, according to some crash data, 33 people were killed and more than 1,700 were injured in NDOT work zones. So April 21st through the 25th is National Work Zone Awareness Week, which aims to remind motorists to be careful around those who have jobs along the right side roads. So anyway, that's my safety minute. As far as cool moment, we try to bring in things when we hear from members and stuff. So Mary Bennett, a member, stopped in and she brought a drawing in for this year's pies, and she wanted to let us know she really appreciated the article. We've actually heard this from a few people, not just necessarily this article, but the Stone's article that was wrote. We wrote that in-house. That was specific to our magazine, it didn't go, across Indiana. But she liked that, and that is something that we've been doing more of, is taking out some of the Brett's Buzz, because we get a certain amount of pages. And so we've been able to write our own articles and submit those in place of Brett's Buzz some months in order to highlight some folks here locally. So just thought that was pretty neat to share.
Thank you, Mary. All right. Next item is for your information. Do we have any questions, comments, concerns from anything that's posted there for your information?
I have nothing in my open and closed. Is that?
Okay. Is that correct? Nothing in open or closed items?
Correct. Yeah, no, we don't have any action items at this point. I did add the trust stuff in there so that you guys had visibility to that.
Everybody good? All right, we'll go on to the approval of the previous meeting minutes from February. I think everybody's had a chance to go through them.
I'd like to amend the last thing to a no vote on that instead of thing. Can we do that? How is that done?
I don't think, well, I don't believe you said yes or no.
I didn't say either. Because
So
I was-
that's what abstain means.
Right.
It doesn't mean you said no, but it doesn't mean you said
Change
yes.
it to a no.
You can't do that now.
I do think.
Well, at the time, when I asked for, the yeas and then I don't think it
Can't
was,
be amended or changed.
no, you can't change it after the fact, but I don't think you said either. You had told me you said
I said nothing.
nothing. And so that's why I went ahead, we put that out there as abstain. So,
Is that on the agenda tonight?
is that on the agenda?
Yeah.
That's from the meeting, is what
No, I
I,
understand that, but or is that like a,
Could we revote? Could we
could
vote
we
again?
just do it again? With
Could we just add it to the agenda tonight and vote again?
And you can vote however you want it.
Is there any benefit? Is there any detriment to doing that?
I don't know.
I mean, it's like the motion to release it and we vote again.
Then everybody could change their votes if they wanted,
Yeah.
but we already voted.
I mean, for purposes of the minutes, it is what it is at this point. But if somebody wanted to bring it up and vote again, I guess we could.
Yeah, maybe I wasn't real clear what you were saying. You're just saying basically talk through it again.
Yeah, if we need to, if somebody has heartburn over it, we could vote again.
Let's see how that works toward the end of the meeting. Okay? Are we good with that? Okay. So, guess we need a motion to approve them yet.
I'll make that motion.
Yeah, we need a motion.
Steve, I'll make that motion.
You get a first, okay?
I'll second.
We have a first and a second. All in favor, say aye. This is to approve the meeting minutes.
Aye.
It's unanimous.
Last month.
All right, next item then is the CEO update, Brad.
All right, I'm gonna stand up. So just to give a few updates here. So construction work plan, we did submit a construction work plan at the beginning of the year. We're through all the engineering, we're through everything that we need to get through. It's been in RUS's hands. They did let us know. I kind of figured this, but the approval for that will not be until next year. They're saying sometime in 26. And so just to let you know, we will not have a new work plan to borrow off of until 26, which honestly doesn't surprise me. So just wanted to give you an update on that. Next is the fiber project update. So quite a bit going on here. So number one, they have released, so there's 6 DAs through this phase one. So DA 1 has been designed and released to D&H, who is our contractor. DA 2 is due on March 31st. So essentially we have the first 2 DAs done or almost done, and then one of them is already released to D&H. What we are learning is that the make ready, so far in make ready, there is 0 poles that we have to replace. And remember, so we did the load, and that we did some of the load analysis, statistical loading analysis. And so it's showing right now that none of the poles that for the first 2 DAs that we have to replace. There are some guide wires and what they call U-guards. So guide wires being, because we're putting fiber up, it needs another guide. And so because it needs another guide, our guide has to go out farther. So essentially they'll pull the anchor out, depending on the anchor, most likely they'll replace it. They'll put the anchor back in farther out so the angle's more, and then put a new guide wire in. And so I think there's roughly, I want to say 15 to 20 of those. And then some U-guarding. U-guarding is the little channel that goes up the side of the pole that carries the wire in it that goes all the way up to the transformer. There's some that we have to go up a little bit farther. So all in all, we did get ARC involved. So ARC's been doing all of our pole replacements for our pole, or been doing some of our pole replacements. And so they're going to go out and move these anchors for us and do this U guarding. So I think that's really good news to know that we're through the first 2 DAs and really there's not been any poles other than the red tack poles. So if it's a red tack pole, obviously we had to replace it this year anyway. So permitting is in play or in process right now. So there's 4 railroad crossings in the first phase or in the first 2 DAs. So those are in process. Those are usually the lengthy ones. And then there's about 10, I believe, NDOT things that we're working through those. So right now, no holdups from a permitting thing. And that was one of our risks. It's always a risk going in with permitting. So right now, the fiber reels are due in mid-May. It's a little bit, we were hoping to get the reels in at the beginning of May so that we could start right at the beginning of May. It sounds like it's mid-May. So right now, we're estimating construction to start mid to end of May. So that'll be here before you know it. BEAD. So just to kind of give you an update of where BEAD's at. We've went back and forth just on some adjustments they wanted us to make. Nothing crucial. I felt good about it because that means they're paying attention to ours. We will know, honestly, any day. Our thought is we'll know within the next 3 weeks is what they're telling us right now.
Of the total?
Yes, for BEAD. And so just to let you know, this is kind of a heads up. They're going to let us know within the next 3 weeks, any day now, but that is not for public consumption. In fact, they're saying June is when we would be able to go public. And to the point where if it gets leaked, they could pull all your funds. So when we find out, I figured we would maybe quickly have a meeting to go through that and what we were awarded and things like that, but we're going to have to keep it confidential up until June. The other thing that we learned is depending on what they award you with. So if they award you every single census block that you put in for, you have 1 day to accept. 1 day. Literally 24 hours. If they don't give you all the census blocks you put in for, you have 5 days. It has to be submitted by the CEO within those timeframes. And so depending on what we get awarded and where we get awarded, we may have to quickly get you guys together, especially if we get everything and it's 1 day. I don't need to get you back together because we'll be over the 50%. But if we would happen not to, the approval you guys gave was anything that was granted at 50%. Let's say we come in at 45%. Is that something we still want to do or not? That's going to be a decision you guys are going to have to make. And we're going to have to do it within 5 days. So just giving you a heads up. Be prepared.
So they would do it not based off of addresses, they just based it off of a dollar amount.
It's all census blocks. So they'll award by census blocks. They call it continuous census blocks, but so there's a chance that every single census block we put in for, we will not get. If we get them all, no problem, right? We're well over 50% grant and we can do it within a day, no problem, because you guys already made that. But it's where, for some reason, if we got locations that, we didn't get the ones that we asked for more money, we got the other ones and it threw that number off a little bit. That's where we'd have to get you guys together. The other thing I wanted to show you is we are really, really close to crowd fiber being implemented, and I wanted to show you what that's going to look like. So this is all basically from Smart Hub. So somebody will be able to go into, you don't have to go to Smart, you don't have to have a Smart Hub account. What you have to do is get on our website. You can't do this yet. We're still working out some bugs, but this essentially is the map. And then if you put in an address, does anybody want to try their address? Uh-oh, now it's not working. Try this one more time. Promise it worked right before the meeting. (394) West County Road, I assume, county.
Might be something with the Wi-Fi, because I keep trying to download a couple things on mine too.
Yeah, something's.
I was trying to download an email and it won't let me download an email. The one sent this afternoon at 1:50, I just can't download. It won't pull it up for me.
Yeah, it's not coming up like it should. No. All right, well, we still got some bugs to work out, obviously. It's funny because it was working just fine earlier. Yeah, it's not working now. So anyway, basically you'll be able to put an address in there. It will pull up. There's two areas. So there's a green area, which means that is, we have been granted that. It's part of the next level. So eventually we'll be able to put in there like different color coding. So like, hey, we're actively building yours, right? People can go in there, they can check. They can also go in there and say, hey, I'm interested in service. They'll hit a button, they'll send it to us, and it'll come to us in a form of a work order, right? And then we'll service order, then we'll call them and get them hooked up with fiber. So it'll also show the areas that are beat. So it'll tell them, hey, you are a location that we don't have funding for at this point, but we have put in funding. And so that's the crowd fiber. We're hoping by the end of the week to have that going. But as you can see, we've been working on the maps, and so it still has a few glitches. Questions on that part of it? Anything else on fiber?
So what date will the first person?
The first person, we don't have an exact date.
Sometime in, what's your best guess?
Our best guess is in, what did we say? I can't remember. We just put that on our thing. No, it's before that.
Oh, okay.
I don't know, Steve.
Well, that's okay. I mean, we're close.
Yeah, I mean, we'll start and this is gonna go quick.
Oh, yeah.
So if we start towards, the end of May, probably 2 months after that, I'd say.
By third quarter?
Oh, yeah,
Third quarter is a really
I would think so.
conservative guess.
I would think so, yes.
Realistic.
Good. And we are putting together the Gantt charts and all that, just high level so that we have something to show you guys and kind of get an update on that too. All right, the RF meter, anything else on fiber? Sorry. The RF meter replacement program, just kind of give you an update of what's going on there. So we call these things DCUs, and what they are is they're collectors. So it's literally just an antenna that goes on top of one of our poles, and then it has a wire that comes down. There's a box on the side of the pole. That is where all the communication comes from. Those are called collectors, so DCUs. So we finished up today and tomorrow, a site survey. So they basically did a design of where we need all these things today and yesterday, today, and tomorrow is going out, taking a look at these things and seeing, are they poles that need to be replaced or do we need to put an extension on it? Just looking at actually putting eyes on where all these things are going to go. The meters have been ordered. The DCUs all have been ordered. Right now they're due in at the end of April. So kind of we're looking towards the end of April, which by the time we do everything that we need to get done, deployment's going to start in August. Right now we are planning on having this project wrapped up towards the end of the year, by the end of the year. Again, that's probably a pretty stretch to say by the end of the year, but that's what we're going to target is by the end of the year for the meters. Any questions on that? All right, cost of service study update. Basically, Larry has all of the information that he's asked for so far. I know the one piece that he doesn't have is all of our meter data. So, Matt, I don't know that we have anything else to share besides.
I've been in communication with him last week. He sent me a couple of questions at the end of the week. I got to get back with him probably tomorrow on.
Yep.
I've been busy with this and a couple other things. So, but in general, yes, The other week, I told him I have a whole day devoted to him, and then I heard from him a week later, so.
So we are still targeting that like end of June timeframe to have the very first kind of draft to take a look at. The buildings project, so we did put something on the agenda later on to kind of talk about board representation there. Just to give you an update, we bid this out to 3 different companies, basically design build companies. 2 we've been struggling a little bit with. They wanted to either use the old plans that we had or they wanted money up front. What we were looking for was here's a sketch of what we want. Here's approximately the sizes. Give us your best estimate cost. We'll work through the process, land on here's the contractor that we would go with, and then ask them for a bid on to do the architectural work, which is when I'll come in here, ask you guys for money from the for it to be architect, and then we will get hard, fast numbers for a budgeting purposes to come in here and give those. So that's kind of where we're at. We did pick up 2 other companies. So the one that Whitewater used, I can't remember the name off the top of my head. They were interested, and then we got one other one from the EDC that was interested. So we are working literally with 5 different companies to try to get some estimates on what we're looking at. And then we'll talk later about board representation on kind of that committee. Any other questions as far as any of the other projects? One other thing I will note on the fiber project, as we've been going through and doing the make-readies and assessments, we have found that there are quite a few, when I say quite a few, less than probably 50, other attachers that are on our poles that are in the power space. And so we have sent formal communication through our attorneys to move those ASAP. 2 of the companies are actively working it, and 1 we haven't heard back from yet. So I'm still kind of pushing on them on that. We do have a workaround. I mean, the nice thing is we are in the power space, and so we can just go up a little bit higher. And so it's not stopping any of our work, but we thought that as we caught some of these, we would want to make sure, because it's a safety issue in our mind. Any other questions? We hit the metrics? Sure.
For January or February?
February. Caught that, didn't you? All right, February's median temperature was 4% cooler than our 5-year average. So you can see that just a tad bit slight under the 5-year average. Then if you look at HDD, so this is heating degree days, you can see we were about 904 compared to a 5-year average of 831. So obviously because of the colder weather, it shot that up above the 5-year average, like you would expect. Purchased energy was down about 0.7% when compared to our 5-year average for the month. And then demand was up about 0.5 over our 5-year average. Retail sales to budget. So this is just numbers to budget. As you can see, residential is really carrying the weight. Commercial also was quite a bit above in January and kind of came back down to neutral in February. Industrials are down. There's a couple industrials down, but the one that has been down is even farther down. And then you can see from a transmission standpoint, really the story here is residential and transmission are picking up the big bulk of sales to budget. When we wrap all that together with, if you look at our gross margins, so basically power costs have been up due to sales. Our revenues also go up. So if you look at our gross margins, we're basically flat to our budget. And you can't even see if you look at the cumulative gross margins, which gross margins is something I track really close. That's what really matters, right? That's the money that's left over to run the business. You can't even see the difference between budget and actuals. And then we ended February with about 6% over in sales. to budget. So we're in a good spot, but we're only 2 months in. Outages. I don't particularly remember this blip. And so I went back and talked to the guys about it because it's not a large blip, but it definitely impacted our numbers. Again, it's not over what we would consider a major event, but I didn't realize this. There was 2 wrecks, and it was a rainy day. If you remember, it was a Saturday day after Valentine's Day. There was a 3-phase pole hit out by 700 East at 6 p.m. And then at 5 a.m., there was a 3-phase pole hit out on 421. So those 2 had quite a few members in them. They were broken poles, so they were pretty long outages.
Okay.
I don't quite remember it.
So is that what drove up the number of outages significantly on these charts? I mean, because it's lost hours is not much, but number of outages is not.
That wouldn't have necessarily been the number of outages. I think the number of outages is we are seeing some things in our system, and we think it is related. We're kind of actually in the investigation stage right now. Outages are rolling in weird again. It does this every so often, and we go in the system, we're like, what the heck happened? For some reason, the AMI is pinging very, very slow. And so the timing that they come in and they ping, they're coming in as singles. If anybody was watching
We talked
the
about
outage map
after the,
when the Westport sub went out, that came in as like 400 separate outages. And it took forever for it to roll. And the only reason it ended up rolling is because we heard from Future that there was an outage at Westport and we rolled it ourselves.
Scary.
And so we're still investigating that. It has something to do with the pinging of our system when it comes to the AMI, which we know we have issues with. That's why we're replacing it. So I think the number of outages, no, that's not what caused that. I think it's basically due to what I'm talking about. We're trying to clean them up as we go, but I do think you have more single outages that really should be one in our system. As you can see, the number of outages, like you stated, a bit over, so about 1,000 compared to 745.
so those are actual though. You're saying that is probably the number.
No, what I'm saying is I think that is overstated.
It is overstated there. Okay.
Yeah, I think what you're going to see is it's overstated because when it should be, 3 houses, I'm just giving an example. When there's 10 houses, let's say, if it shows as 10 different outages, you're going to get hit on a number of outages where it's really just one. It was one tree that hit the line. So we'll know more. We're trying to correct these things as we see them, but it's getting worse and worse and worse. And we know it has something to do with the pinging of the system. I'm assuming it's our system's old.
Transformers, the AMI transformers.
Yeah, the AMI there's a lot that it could be contributed to. And then lost consumer hours, as you can see, we were about 54 compared to 34. So we were over there. This isn't impacted by that, what I'm talking about, right? This is literally just hours of when consumers are out. I do believe that is over because of that one little month that we were looking at. Okay. I did put the safety measurements in here, and I'm still kind of working on this graph because what I really want to try to show is that the question you guys should be asking is, how many crew audits did you plan to do and where are you at? And how many more or what did you do compared to last year? Our goal is for near misses, safety suggestions and incidents and corrective actions that year over year we're getting better, right? Same thing with crew audits. Year over year, the expectation should be we are doing more. And so I'm not quite there yet on these 2 graphs, but that's what I'm trying to show is to how did we compare to last year and to plan? That's what both of these are showing. And I feel like we are continuously, as you see, our crew audits are going up over last year, and same thing with near misses and corrective actions. It's kind of always hard to say you want more near misses, but the more you get, the more you learn. It's the old triangle thing. It takes a bunch of these small ones to add up to that one big one. So if you can correct them at those smaller ones, you got a better chance of correcting the big one. So I think they're in a good spot, and we're turning really well. Jeff is one of his sole duties Jeff Hall is to do these crew audits, and so he's been taking it serious and doing quite a few of them. So. And then I do show AR past due. I think this was the 60 days. So we track it 30, 60, and 90. I picked the one in the middle. Trending a little higher than what normal is, but still quite a bit lower than what our 5-year average is. Any questions on any metrics? Sorry, go ahead.
What's driving this, and it's not a huge number, but it looks impressive on the graph, but what's driving this build meter number? It's more than it has been, it always goes up, 30, 40, 50.
It looked significant, didn't it?
And it has been
This year so far.
we haven't investigated that. That's a good question. I saw the same thing when I
It's
reported
just
the numbers.
curiosity more than anything. I mean, I guess.
So it is an average number that we do. So at the beginning of the year, if you look back at past years, at the beginning of the year, typically it is more this year than it has been in the past. But typically that first year it's a little higher because it's an average, like what's the average number across every single month of members that you have? Because you have a bunch going in and on and off throughout the month, right? And so it's an average. So it's just like a lot of our metrics. As you get towards the end of the year, the average is a little better. But it is different than it was last year at the beginning of the year, if you look at that. So I don't know the answer to that, other than there's more people. I don't think right now there's any difference in apartments, because apartments can really drive, like if apartments go from a lot of vacancies to no vacancies, that can really drive the numbers up. But I think all the apartments in Decatur County right now are booked. You're on a waiting list, so it can't be that. I don't think there's that many new builds. I was in the EDC the other day and it's nothing out of the ordinary. So I don't know what's driving that up, to answer your question. We could dig into it though.
No, I'm just curious.
It's a good thing.
Yeah.
All right. Any other questions on metrics? If not, I'm going to hand it over to Matt.
We're good, thanks. Yeah, Matt, if you want to go ahead and talk about financial.
All right, Sean. In general, the usual report that I have most months, they're my letters. None of them rose to the level of the 250,000 or 5% on anything except for operating revenues and power costs. But I will, in general, our plant went up about $200,000 last month, 196 in general. And we also had about $115,000 that in our other deferred debits, which is where the fiber is showing up. And then from a balance sheet standpoint, those are really the only two main things that happened during the month. One thing that for February and March, one thing you will see, we did borrow a last of our RUS money because it was going to expire at the end of this month. So we went ahead and borrowed $1 million there at the cheaper rates. And from a balance sheet standpoint, that won't show up in this. That'll be in next month's. Current month, not a lot of oddball stuff, in all honesty. I really, there's not a whole lot to tell you there. It was a normal month. We did $200,000 in plant and 115 and into the fiber stuff. Any questions on the balance sheet? Now the income statement, it's the same statement as always was. Brett told me the other day he thought it looked busy.
It's busy. It's different. It's just a different font.
Yep. In general, the main things here to note is like Brett said earlier, the operating revenues were about $350,000 in both revenue and power cost higher. We're $10,000 over in gross margin, which means our billing is following pretty darn close when you're that close. If to follow along, our KWH sales are about 6% over budget. That won't last throughout the year, so I'm sure that'll come back down. Outside of that, income statement wise, there's not really anything major that sticks out. I mean, we're doing everything's pretty well in line with budget for the most part. There's nothing that's off hugely. I'd say other than, like I said, the revenue and the power costs are very high just because it's been so cold.
At the bottom of this page, you've got some ratios. So you've got a tier and another tier. So I'm surprised the O tier and the regular tier are that close.
Well, if you look, there's almost nothing in the other right now.
But other is, doesn't O tier not include capital credits from?
Yeah.
Okay.
And there's almost nothing that has occurred though.
But I mean, but that's not we're getting.
Yes. So this is based off 2 months. So that's also why the numbers between last year and this year are so much different too, because the margins last year in the first 2 months were significantly higher. So that massively impacts the number.
So
since you're only looking at 2 months.
Capture the retirement until you actually get it.
Yes.
Even though you know you're getting it. Okay.
Yes. This is based off those 2 months. So as the year goes
Actual
on,
numbers on this as
Yes.
we go. Okay.
Brett asked that question. I complain that these numbers mean nothing and we should take.
Well, I wasn't going to say that, but that's kind of what I'm thinking.
in 6 months, those numbers will be good to see.
Your numerator is just 34 meetings.
Yeah.
Yeah.
And once you get to October, November, these will be very meaningful every month, because then you won't be a whole lot more that's going to come in.
I asked the exact same question.
I was ready for that one.
Just disregard it until.
Yeah, I mean, it's an interesting thing to see when you compare it to the prior year, just because it shows you how much that stuff can shift it. At least in that regard, I thought it would bring up discussion, so it did. So.
That's the point too. So.
Cash flow in general, our cash went up just a little bit during the period, mainly for margins. As Earl said earlier, you could see that our cash from investment activities, 300,000 more money going into the plant. I mean, that's probably the best way to describe that. Other than that, there's not a whole lot of, I mean, this was a very standard month with not a whole lot of variance from the budget. The biggest thing I'd point out here is in the vehicles and trailers. We had to buy the chassis for the one truck that's not going to be done for 2 years. So if we paid for it before the end of this month, we got a discount. So we bought it before at the end of the last month. So it got shipped and sent. It's going to sit there until they can put the chassis on it, which is probably a year out. Then we'll get the rest of the bill. In general, we're pretty much right in line with where to be expected. So
that does bring up discussion that Matt and I were talking about is like, I don't know how you budget for this. Like sometimes they will give you a discount and it makes sense to go ahead and pay for the chassis. Sometimes you don't. It's like with the lead times of being 3 years, it's kind of like, I don't know how you budget for it.
It's also who you buy it from.
Correct.
If it comes from one company, they want you to buy the chassis and send it to them. The other company, they bill you for it all at the end.
It depends on who comes in least amount for us to go to. I just don't know the way to accurately.
And the digger trucks are 3 years out. I mean, they told us 36 months till we even get it. So.
But that does comment for another, when we talk about this building and where we end up with it, the reason ours are so far out and why they're getting so expensive, because we have to custom order them to fit in our barn. And so there's a lot of cost in our trucks and lead times because you can't, I mean, right now you got literally about a foot, to fit it into the door. So just something to think about.
Backing up a page.
Sure.
That, and you may have covered this and I may have missed it. The accounts receivable for this month. says the year is negative 90,000, but for this month it's 235. So what's that variance?
That's just the difference between the Hoosier or the accounts receivable. It's the difference. So let's see, how do I want to explain?
Because we had a big February and you didn't get that all
It's the
collected.
difference between,
We had a high usage.
it's the difference between the bill we get from Hoosier and what we bill out. It's just the change each month.
So that was just, you know, down there for 2 months.
Yeah. But you also have three less days too. So you got 3 less days. If you're looking at the cash flow, it looks backwards there because the decrease is the positive number instead of the negative. So you got 3 less days, so you collected less money. Why Earl may love the cash flow, it's great at the end of the year. I don't love it during the year because everything just bounces like crazy. But that's my opinion, of course. Whether we choose to pay a bill one day can change the cash flow.
It's a snapshot in one day.
Well, I mean, if we choose to pay this week or next week, so
Well, it's a huge difference between
Yeah.
next Monday, the 31st, and
Yes.
Tuesday, the 1st.
that's right. It's going to be a huge difference. And we'll pay on the first. So
Especially on a significant purchase.
yes. And we try to pay on Tuesday. So this month there'll be. So April, that'll wind up being. You probably will notice that actually, because once we get in April, we'll pay the bills 5 weeks. And in March, we're effectively going to pay them 4.
Well, if you're cutting checks on Tuesdays, you're
Yeah.
done for the month.
Yeah.
Right now.
Yeah. So yeah, next month we'll pay five times.
Tuesdays.
And this month we'll only pay 4. Then in May it'll be similar too. We'll have 5 paydays instead of 4. So that'll shift it as well. Any questions on anything?
Poll placements, you are almost going through half of what has been budgeted through the year.
They have done a ton of the red tag polls already for,
Yeah, so are we, I mean, I've had a schedule.
yes.
You know, it's because that's good weather and stuff, so like, if you can get more done throughout the year, if it calls for it, you budget more, or
That's a good,
Yes,
really, really,
that's
I think,
thinking
I
way
think what
ahead.
you're asking is
Yes.
if we have more, if we find out we have more from this year coming up, do we want to go ahead and get it in front of it a year ahead?
yeah.
I'll look at that, Carl. It might be an opportunity. I can tell you right now, ARC is, from a price standpoint and getting these done, they are ripping these things out right and left.
Yes, they have gotten, I entered 2 invoices today that were,
Yeah, the weather's helped too.
they got a ton done this month already again too.
I'll take an action item to see if we get done the ones that we had slated for this year. Is there an opportunity to catch ahead for next year? We may be able to.
Once they get tested.
Yeah, that's coming up though soon.
Yeah. Yeah, that'd definitely be an opportunity. I know the crews are making good progress on a lot of their jobs too.
Are we replacing more poles too, because of fiber down here, because we have to
Stronger ones or tougher?
No, we were so far, that could change. So far through three DAs of 6, there's been 0 that we've had to replace that aren't red tag.
Right.
Yeah, the regular red tag ones. So far, I think the decision to do ADSS is going to pay off big when it comes to make ready. We'll see. That could change.
They've also finished, I think, a couple of the projects. This past week, they've gotten a couple of larger projects they've been working on done too.
Yep.
Because I saw the invoices roll in. Any other questions on plant or financials or?
I like the key revenue indicators report.
Yeah.
That's new,
It's,
isn't it?
it took me a while
That's neat.
to understand what it was saying, but
I got,
I like that.
on the,
I like
I got a area or a space for the facilities charge. What is that specifically in the key revenue indicators? There's nothing there. And I'm just curious.
oh, you talking about B?
451.5.
Or no, I'm looking at the wrong.
Yeah, 451.5.
I probably should have deleted that line.
Okay.
I pulled this report.
'Cause I
and
assumed
if there's a blank there's a couple, that's one I probably should have took out.
Okay, there's another one up there too that you could.
Yeah. You had me remove some on one of the other reports,
Yeah.
but I didn't.
We're still working on some of these
This
these
is
new reports. But there's some on the income statement too. The idea is all the blanks will get removed.
Okay.
It's not on there anymore.
It was just a standard report.
This is just usage, right? There's no, we took out all the cost components of all that.
I did, yes. Because the cost component, you have demand.
Oh, I know, we used to have a lot of conversations about that.
You can't get a number that is,
Yeah, it's not always apples to apples.
yes. As the one industrial has fallen off heavily, it would totally skew their numbers there. Especially, I mean, you can see how much they're off on KWH.
Yeah.
I mean, I would say, as far as they've fallen in the last 3 years, I would say.
And this is from your budget, and
And
your
we
budget
cut the
numbers
budget
are
too,
way
yes.
lower. So they're even lower.
If you look at where they were several years ago to where they are now, it's concerning.
20%, 30%.
I think it's about half. I can tell you here real quick.
It doesn't matter.
I'm glad somebody liked my sheet.
Anything else for Matt? Financials. We're good. All right, everybody good? If everybody's good, I think we'll go into the next item, which has to do with the annual meeting scholarships.
Yeah, so the annual meeting, this is becoming pretty popular among co-ops. And so our annual meeting committee came up with the idea. They asked me, I said, it's not budgeted. We need to go to the board. Essentially, they want to create 3, and I don't have a lot of details as far as like, who would this apply to, like all the factors in it. They'll build that if you guys say okay. But what they were looking at is creating 3 $1,000 scholarships. again, is it for seniors? Is it, they have to be at the annual meeting? All that stuff will come as we get into it. But the idea is that we would utilize the funds from our, I gotta get this right, a decrease in our uncollected capital credits, thereby reducing our donated capitals line on our balance sheet. So as you guys remember, we always said we called it permanent equity for a long time. It's not called permanent equity, it's called donated capital. So the idea is that we could basically reduce that. Yeah, it's not cash, it's not real cash. You have to come up with the money.
Right.
But it will reduce that over time. Their thought was we would do 3 of them. Of course, that's up for debate on the amount and how many, but that's what they're asking for.
So it's not cash.
No, it's a balance sheet equity number. That's not, we don't have that cash earmarked from that, no.
It's not sitting in an account, no.
This would be a cash award, yes. What I'm saying is we're gonna have to come up with the money
To support.
to support it. We don't have the permanent equity money sitting somewhere.
Right. But that's what I'm saying. But it is a cash award.
It's a cash award.
Okay.
Well, it'd be one of those real big checks.
Yeah.
Credit, cash, debit, deferred liability.
Right.
But credit cash is the
Yes.
key
Yeah.
concept that I was trying to get to.
It was just another way to sponsor youth, to get people to the annual meeting. Kind of fits all of the criteria that we do for donations, but it is something that we did not line item budget for. So I thought that was a board call, whether you guys want to do it or not.
I will ask this question. Do you know how many people are we going to award for the youth tour? And have we gotten that many names to come in?
We do. We have more names, I believe, than we put spots. And I think that we budgeted 3, if I remember.
Okay, so that's going to be used, I get.
Correct.
That's kind of where I was going.
I think we're almost too far on that now because it's already been all the submissions.
And well, that's fine. I mean, that's what I'm saying. I know we talked through it. But to me, I was just curious to make sure we had enough interest.
Yep.
Am I correct in thinking we have 6 high schools that we serve? North Greensburg, South, OA, Jennings County, Jacksonville, and then Batesville probably has some too, so it would be 7.
Yep.
7 high schools in our, at first I forgot Batesville. I was thinking rotating every 3, schools to rotate who the winners are, this year, North, South, Greensburg, next year.
Good idea.
I was just thinking that we have,
You potentially have homeschool students too that be interested in, if you generalize them. Maybe.
yeah. I was just thinking of a rotation.
Does any other co-op do anything similar to this, Brett? Do you know?
A lot of them do now. Southeastern's been doing it for years. Bartholomew does it.
Are they going to follow their guidelines, or do you know?
Say that again.
Like their guidelines or their requirements?
They, I don't know. Most likely, I would say that we'll get those.
Is it at the $1,000 level? Do you know?
One,
$500
$200,
level.
500. I think the majority are around 500, but there are quite a few that are 1,000 too. If I remember right, she got the 1,000 because there were more that they do more if they do 500, right? So they may do 5 500s, whereas the 1,000
Total outlay is a certain amount.
I don't have a number of how many of these, how many co-ops actually do it, but there are quite a few. I actually think Whitewater does too now. I'm almost positive. But I mean, I think the dollar amount and how many, I mean, it's kind of up to you guys.
I mean, we're talking additional 3,000, right?
Correct.
I mean, it has to be done pretty soon because by the time we approve it and get it out there, we're talking.
Right.
I mean,
Application.
it probably needs to be decided like now. I mean, it would have been nice to know like last fall so they could get out the word to, I'm not opposing, I think the idea is good. I'm just thinking timeframes,
Yeah.
We're looking at-
They're going to have to get their names
like
in.
they're gonna have to get this out like soon with the criteria.
So is it too late? I mean,
No, I think, I asked that question when she originally brought it to me because I think they brought it to me a couple of weeks ago. I said, can it wait for the board meeting? And they said yes. We'll get it out. We have enough media outlets now that we should be able to get it out pretty quick. I will send you guys the criteria, but I don't know that I'll be able to wait for like a vote on that. I'm assuming we're going to follow pretty similar criteria that the other folks do. I mean, we should just be able to use it.
They're probably close to having that created, are they not? The criteria?
No,
No?
I don't. They've been waiting on it. We're going to get the dollars.
Okay.
I'm assuming, Steve, we're just going to use
Something.
the criteria that everybody else is using. Because that's, from what I understand, it's pretty similar.
I like the idea.
I think it's a great idea. There's a couple things I've served on several scholarship boards over the years. The one thing, that's just my per se, I think they should note if it's a 21st century scholar not eligible. I think personally, that's one of the things, because what's a big problem with scholarships and people, I don't know if there's any, but scholarships don't talk to other scholarships. So some people end up with more money than they ever need. And there's no way to filter it down to those people that are runner up or third or fourth, because scholarships don't talk to, Decatur County Community doesn't talk to Decatur County, the ones from North and South. They don't talk to the Lilly, they don't talk to 21st. But 21st kind of encompasses a lot, that if they qualify for 21st, then just simple things like that. Because if somebody has 21st and they have the layman or the risk or the other ones, they've got enough for 2 kids to go to college and the runner-up doesn't get anything, so.
Yep. No, I get it. We could definitely do that.
And that's a lot I bet on the other scholarships too, because my daughter thankfully qualified for the one. And it did have notes on that on the bottom. That was the criteria.
Yep.
And I think it's the same one hers was from
IEC.
Sydney got it from IEC, and whatever that criteria was, did have that on there. So that might be someone to follow
We can do that.
closely.
Okay.
I think it's a good idea.
So we need a motion to approve.
I'll make a motion to
Would this
approve.
be nobody from or related to an employee or board member can get it too?
We could, if you guys want that stipulation, sure.
It wasn't on the IEC because Sydney qualified for
They
it.
included the board. I know included the board. I think
It was encouraged for board members, employees. But I see either way.
I'd be curious as to what the selection, and I know you don't have that information, but what's the selection process?
Yeah, I don't know. I mean, to me, if it's,
It's a blind draw, is it?
I think most of them, if I remember right, it's a blind draw. Like if you meet the criteria, you go in and it's just a blind
Names in a
draw.
hat and it's one
At
out.
that point, I think employees would be, and that would be okay. If there's actually like a group that decides who gets it, well, then I would say no. What I'll do is I'll send
It's
out,
like there's a lot of missing pieces still.
it was more or less,
What if it's too late?
That's why how fast can they put it together, you think?
I would assume if you guys approve this tonight, I can get you set tomorrow afternoon. Like what the criteria would be. I think they've already probably know.
Should the board review the
So could we
criteria?
say?
Yes, if the board
Yes,
approves the
bring us-
criteria.
Bring us
Why don't we
the,
just do it through email? I mean, if you guys are all on board.
I'm not opposing it, I'm just thinking the board.
No, that's fair.
Because if if Joe Smith gets it and Jenny Smith doesn't get it, the board is going to be the people that hear about it.
Sure.
Not the
Yes.
internal people selecting it. So I feel like.
So how about I report out like this? Basically, the board is good with this, but they want to see the criteria first. They'll approve it as soon as they get the criteria. I'll try to get you something either tomorrow or Friday. I'll text you, I'll let you know. We can just vote through.
Just because the board's going to have repercussions of yes or no.
No, that's 100% fair.
Everybody go with that?
Yep.
Okay.
I want to cut in again here to answer your question, Jason. From 2022, it went from 4.6 to 2.2 the first 2 months of this year. So it's an over 50% drop.
Okay.
Is that dollars?
Kilowatts. All right, then the next item that we have on the agenda is kind of the discussion of the costs associated with the lawsuit. I know we generalized it, talked a little bit about it, and I wanted to ask the board what their thoughts were on, what tracking we should do to, capture the costs associated with the lawsuit, and then do we want that reported in some fashion? So, I'd like to hear from the board on your thoughts regarding that.
Well, I noted on either the check register or the ACH register, we made a payment to a legal firm and it was segregated out. I'm all in favor of capturing as much detail as we can.
And so do we need to include that detail? I mean, are we talking about employees' time as well to support this?
We are, today we are.
You're capturing that now. So that would be easy to determine fairly quickly, the amount of time, dollar amount associated with the time. We could get that. Based upon the legal fees, they probably come in a little bit late. And when I say late, I mean,
So the only problem, and I haven't gotten an answer yet, it's out to Federated now, is we're not seeing your attorney and my attorney's fees because they're going straight to Federated.
okay.
So I know Parrich's and I know Crafts, but because I see those come through and I'm sending those to Federated on my own. But I'm assuming they'll share that, but I have no idea. I'm waiting. I emailed her, called her, and I think she was on spring break is why I haven't heard back.
So once we capture that cost, we have it available to report it out. Does that need to be reported out?
I would say that conversations that I've had, it's a point of interest to many folks.
Mm-hmm.
People are asking about it.
The cost associated with it.
Mm-hmm. Now, does that mean that we need to report it? I don't know, but I'm just telling you that's the only question I get asked about it.
Is it something as simple that can be documented in the minutes? If a board member asks how much were the legal fees in the month of March?
What's the cumulative amount?
I mean, is it just something that could be, I mean, instead of reinventing the whole thing, just have it documented in the minutes? Since there's been concern about it.
And when you say documented in the minutes, can you be more specific? Are you just saying, just make that statement in the
Minutes that are published,
that there's concern about the cost,
and then the cost would be documented?
and then have the cost documented there?
I just think that's a simple way of doing it.
Yeah, I don't think it needs to be real.
I don't think it needs to be a poster board. I just think it needs to
And
be.
that would be as current as what we have at the end of the certainly previous month.
1 month behind every.
Which may not be
We're running to.
actual. Okay,
So far, to date.
okay. Is everybody, I don't know that we need to take a vote on this, but is everybody in agreement with making that published in the meeting minutes?
Just do it, just document it.
It's part of my financials.
Sure, another job.
Well, and I for one don't want to be heavy-handed in capturing it all, but the term last month nuclear option was suggested.
Sure.
If the employees are already keeping their time
Yeah,
separate,
I mean,
based
it's-
on the check register, it's not gonna be this humongous
Yeah.
timeframe any more than what they're doing now. It's not gonna be that big of,
It's
I don't think it's gonna be that big of a
It's easily
timeframe.
captured.
And the cumulative number reported, you could put it under the for information section.
So maybe time by employees plus legal fees plus,
The cumulative.
I mean, I think director's time, some fashion, you could pull out a little bit from there.
If you guys put it on the back of your sheet.
Yeah.
It'll capture.
It'll be captured.
He's writing that all down every month anyway.
Okay. So as I said, I don't know that we really need to vote on that, but I think we'll just go ahead and.
I'll create a memo and pull what I just heard.
Okay.
And we'll just throw it in the. for your information.
Good deal. All right, which takes us to the next item. There's a rule and a reg update that's been redlined.
Yep, so as you guys know, we got a lot of new employees. The idea is Johnny has been very, very good about making sure that we leverage the fact that we've got a lot of new employees, and when things aren't clear, that we document them or make some calls on how to make it more clear. Because the days of, running policies on tribal knowledge it's very difficult when you get challenged by members. So we've been very consistent on trying to, as things come up, Mark's very good about saying, hey, I'm not real sure what to do in this scenario, right? There's a million different scenarios, so we're gonna be doing this for a while. So 2 have come up with the rules and regs. 1 is on service upgrades. So an example of a service upgrade is someone's built, and this one is the most, I mean, this is the biggest one we get is they're building a barn. They're gonna run they're not putting in another meter, right? So what they're doing is they're gonna run their own electric line from their house to this new barn. But because of that, they're upgrading the panel from 200 to 400, right? So that creates some work for us to do. So we got to go out. It could be a bigger underground wire. It could be a new transformer, blah, 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 but pretty negligible as far as cost. So in the past, it's always said that if you do an upgrade, it's because over time your usage is going up, and so we don't charge for those. Well, in the past, it's always kind of like, okay, well, what if they want to do something in conjunction with that? So let's just say that a member's doing this and they have 5 spans of overhead and they want to go underground. Well, because it's a service upgrade, do we just give them that? Well, no, we don't. We never have. But that's the unclearness of, okay, well, how much do you give, right? What is the credit or whatever? So what we're requesting here, which is opportunity number 1, is to basically put in place a 2.5 times annual net revenue. So just like our line extension policy, that credit will be bounced against whatever their project costs are. So in other words, if there are 4 spans of overhead, they want to convert that to underground, and they're doing this service upgrade and the entire project cost is $5,000, and they have a annual net revenue of $4,000, then they'll pay the $1,000 difference. So that's how we've redlined it. I did check in with a lot of other folks. A lot of other people basically have the wording in there that it's at the discretion on site with the engineer. That's what we're trying to get away from. Is we wanted to try to put it to where it's black and white as much as we possibly can on who pays for what. So that's our recommendation.
Now, you just said annual revenue for, you meant the 2.5 times revenue was $4,000, not an annual revenue of $4,000.
Correct. 2 times.
Okay, because you said annual revenue.
Sorry,
But
2.5 times.
2.5 times.
Yep.
Okay, I just want to make sure it's clear.
Yep. In other words, you would establish, here's the credit, anything above and beyond that credit that we're doing for a service upgrade, they would pay for. It follows the IURC's guidelines as far as, anyone that's, a Duke or anyone that is under the IURC, that's what they're doing.
Now, is this still for, is this for the panel upgrade also? Or you're still going to do, hey, if you want to upgrade the panel, we're going to do that?
It's the total project cost.
Not just, we're going to add this other phase. It's anything that.
It's the entire project's cost. But I'll be quite honest, Jason, most of the time we're not upgrading transformers and that. So it's normally we're putting in a thicker overhead secondary drop. It's normally very cheap. So there will be some credits they'll get to doing something above and beyond that they want. It'll probably cost us a little bit more in the long run, but it's negligible.
Probably wind up a lot more underground stuff.
Which is good. The alternative is what we do today, which is the engineer decides on the fly. He determines what he thinks is our cost and what the member's cost is. That's the alternative.
You don't have one here.
Oh, no, Mark, staking. We're staking.
I mean, the staking guy's deciding.
The staking guy is the one that's making the calls.
Making those.
Yeah, I'm sorry, not the engineer.
Okay.
This is giving him some guidance, right, on how to cost that out. Okay, so the second one, which when I've asked, we've not had this happen, but will be kind of hard to explain if we do have something that falls in the 31 to 41. And I think it was just, Matt was in the meeting when we came up with the original. I think it was just a way to try to figure out there's no rhyme or reason as to what we ended up putting in there. So if you look at,
There's always a reason.
well, there's a reason, but it's not an exact science.
Set of mathematics.
So if there are facilities that are between 30 and, so it's very, very clear, if it's 30 years or younger, it's not fully depreciated, you pay 100% of the cost. Anything over 40, 45 and over, you get a 50% discount. And so the way that we have it worded today is that you get a credit for the materials only, and it's based upon the average cost of each component in our system. Well, the average cost in our system goes back to as long as we've ever received it. You have to type in every single one of these components, which can take forever, as opposed to you build it in the system and it costs it to the current cost, right? That's how we do everything nowadays, is it's built in, we design it in the mapping, and it uses the assembly units and the cost in the system to drive exactly what the costs are. So we try to figure out what is like comparable to what we would do today. And the back of the napkin, going through a bunch of different scenarios, that 25% fits very, very well. And so to simplify this, what we're saying is if anything's between 31 and 44, you get a 25% discount of the entire like for like replacement. If it's anything, again, over 45 or over, it's the 50%. So it simplifies it. It's easier to, number one, to execute. And it's easier to explain to a member that these are fully depreciated out. So there is some benefit to all members, just like we went through a couple of years ago when we changed this. So that is change number 2. So those are the 2 changes that are redlined. And I did go over both of these with Larry Feltner, and he said, yeah, this is in line with. Either do this or either very open-ended.
And this is what Johnny and Mark both have proposed?
Yes.
Both of them?
Absolutely. And we'll have more scenarios, I'm sure, come up, and I think Mark and Johnny are really doing a good job of. Don't use tribal knowledge. That's make it, and it's very hard because we are a job shop. Every single job is totally different. If your neighbor, it could look like the exact same job, and I guarantee you it.
So those 2 changes are on pages 15 and 16, if I'm not mistaken. Is that correct? That you just went through, or most of them were encapsulated into page 15 and 16.
Page 9 is the 25%.
Not page 16? Or excuse me.
Oh, yeah, page 15.
I'm sorry, 16 and 17. 15, 16, and 17.
Yes, there you go. Yes.
Well, wait a minute. No, I'm not. Just wanted to make sure. So you've got them there. Just so we see the red lines is they correlate to what you just talked through.
Yep. Yes, there's the one. Yes.
While we're just talking through this, I just assume if the board wants to make a motion on this now, that we do it, we're going to need to get out of open session here momentarily and go into executive session shortly. So
What is 7:30?
maybe it's a good idea to go ahead and act on this one and then come back. We will come back into the open session. I'm not going to adjourn the open session until after we come back out of executive. If everybody's good with that. So we need a motion to approve if, everybody good with it? You want to talk about it when we?
I'll make the motion.
Okay, a motion to include all the red line changes
Changes
for these rule red. Okay, we have a first.
All set.
We have a first and a second. All in favor, say aye.
Aye.
Approve.
Okay, it's unanimous. All right, so that's been approved. When we come back into open session, we'll continue with where we're at in agenda item number 10. At this time, we're going to get out of open session and momentarily go into executive session. All right, so we're back in open session. I think the last item on the agenda has to do with receiving an email today regarding a formal complaint. It has the appearance of including operational questions that I think we as a board need to consider making a motion for Brett to respond to the complaint on our behalf. So,
I'll make that motion.
okay, we have a first.
Second.
And we have a second. All in favor, say aye.
Aye.
So it's unanimous. So Brett will create the response to the complaint. Thank you, Brett. Unless anybody has anything else, take a motion for adjournment.
I'll make a motion to adjourn.
Okay, we're adjourned. Good night, everyone.
I'll second.
We're good.
Okay.